China makes a move to take golden shares in Alibaba and Tencent, which is something that I want to cover on this video. And so if you haven't done so, smash that like button, guys. You're watching More Money. Let's get it. What's up, guys? Welcome back to the channel. This one's interesting because I think it's a lot of the same thing. I think a lot of people are making a bigger issue about this whole golden shares thing than there should be made at the end of the day. And I'm going to explain what my thoughts are on this issue as we get into this article by the Financial Times. So you can see here, the Financial Times actually issued this article today, and they said that China moves to take golden shares in Alibaba and Tencent units. And so effectively, Beijing changes tack in its efforts to secure a firmer grip on the country's tech giants. But, you know, this is a very broad statement, but what exactly is happening? And so they get a little bit into it here. So China's moved to take golden shares in local units of Alibaba and Tencent as Beijing formalizes greater role in overseeing the country's powerful technology group. So once again, just a broad statement, but I think, you know, what they're going to tell you later on in the article is that really what they're trying to do is control information flow, which is fine. This is something that we've seen China do broadly anyways. And I think what this is coming about from is the fact that so much information got out when the protests were happening. And so the CCP government, now that they sort of have the protests sort of calm down, they want to take a greater control over what gets shared on social media in China. I think that's largely what's happening here. You guys let me know if you guys have different thoughts, but let's continue to go through this. So you can see that the government's increasingly snapping up small equity stakes in local operations of big tech companies. It recently did with TikTok owner ByteDance, of course. And so here's what it is. This provides the Communist Party with a mechanism to remain deeply involved in their businesses, particularly in the content they broadcast to millions of Chinese people. So, you know, let's not pretend that this already isn't happening. Now, of course, TikTok is a great place to make sure that you have your hands on if you're the CCP to control what people post or upload online. Tencent, of course, as well, because of the WeChat functionalities, blah, blah, blah. Where Alibaba comes in play is not just the fact that they have that Youku app, which is the equivalent of YouTube, but the other thing that you kind of got to be aware of with Alibaba is in Taobao and Tmall, they're also doing sort of like live streaming now, and that live streaming to sell products can get shared on through WeChat. It can get live streamed through just you know, in people's feeds and stuff as well. And so there's a whole sort of like ecosystem where information can be shared. And so it seems to me that that's what they're trying to really do. They're just essentially trying to control the narrative. But the question I have for you guys is, did you think that this was not happening in China anyways? So effectively what they're doing is they're taking a 1% stake in those companies called golden shares, and they come with special rights over certain business decisions. So, you know, why even bother with golden shares? This is already what's happening. It's not like the CCP hasn't exerted pressure over these companies. For example, the CCP said that they don't want these large conglomerates that own all sorts of businesses. And so what did Tencent and Alibaba start to do? Well, you saw Tencent at least sort of divest Meituan, and you're going to see more and more divestitures as time goes on. And it's not like they haven't exerted pressure before. We've seen this happen. For example, just like a year and a half ago, maybe, when the CCP started talking about common prosperity, you saw immediately Alibaba and Tencent start committing capital to common prosperity measures without even the CCP having to say anything further than that. And so you know that the CCP exerts pressure over these companies. When you invest in China, this is just something that you have to take into account. The real issue and the real question that you have to say or ask is, would China want its two dragons, Alibaba and Tencent, to fail or not continue to grow at good rates? And so, you know, one of those issues could be that the companies could grow, but the shareholders get destroyed. Now, that's a common argument that a lot of people have who decide to not invest in China. And it's a very real and correct argument where these companies could absolutely grow, but the shareholders get sort of like taken out from the growth. But I just don't believe that that's the direction that they want to go, because why would you dry up capital in an environment that right now is friendly to investing in China? If you dry up that capital, well, then what happens with your future growth prospects, or what happens when you absolutely need the capital? So it's a very short-sighted type of thinking, and I don't think that it plays in the overall scope of what they're trying to do and build out that country by the CCP. And just capping this page off, so within China, the stakes are known as special management shares, and since 2015, so this is not new, guys, these have been common tools used by the state to exert influence over private news and content companies. And so, you have to ask two questions, and I don't think we know enough yet. One, is this just to exert more control over content that's shared? And we already know that Alibaba and Tencent do have a lot of content that's shared. Or is this now the second issue, which is what's scaring people and could potentially be that second issue, might I say, is that are they now just going to try to exert exceptional amounts of control over regular day-to-day business decisions made by Alibaba and Tencent? If that's the case, you can have a lot of bureaucracy at the top. Look, corporations are generally, as large as Tencent and Alibaba are, they're generally bureaucratic at the top anyway, so they do move slower as it is. But, once you start putting in government officials into there, these companies can grow much slower, and it just doesn't become a great investment to shareholders overall. So you have to make the decision for yourself. Is it one or is it two? I just don't think that the CCP would want number two to happen, but I think that they could accidentally have it happen as well. So something to pay attention to, but this is not a rush to the exit doors as I'm thinking. I just think it's more of the same right now. They're just going to have somebody sitting somewhere as it relates to certain types of business decisions with these companies now. And it looks like it might be that first point that I mentioned, because they're sort of like surmising what the aim is. So the Chinese internet regulator, who took the stake in Alibaba last week, it looks like they took the stake to tighten control over content at Alibaba's streaming video unit Youku and web browser UC Web. So once again, these are non-core. This is something that the CCP is already doing anyways, and so who cares? Grow these things out anyways. This is just the nature of investing in China. And if this is surprising to you, then you don't know enough to be investing in the CCP, or in China as a whole, right? And although I did say investing in the CCP, I guess it kind of is one and the same, right? Like when you invest in China, you are investing in companies that have to absolutely be CCP loyalists, otherwise it could hurt them over the long term. And that's kind of what we saw over the last year and a half at least. And so, the state is not going away, and this trend is for the future. And so I just say, LMAO, what did you think investing in Chinese companies entails? This is why, one of the reasons why I say, focus on diversification, because we have that unknown factor when it comes to investing in China. The most important thing about investing in Alibaba is that we had such a huge margin of safety, especially when the shares went under $100 per share. A lot of you guys who were buying and you made your cost basis under $100 per share, you guys made quite a bit of money already. And it just comes down to, would they want the shareholders to suffer as a result of the CCP taking ownership? I don't think that's the goal. I said it before and I'll say it again. I think this ultimately is just for content moderation, but they want these companies to do well, and they want to continue to allow the shareholders to get rewarded. Now, if the CCP comes in and they make a decision, hey, you can't buy back shares, you can't pay back dividends, okay, that's a red line. I'm out. I'll take the L on this one. And so the Financial Times did see documents that detailed how the golden share arrangements work at ByteDance at least, and this might give us an indication of how these things will work at Tencent and Alibaba. And they show how the government has tightened its grip over TikTok's parent's main Chinese entity since April of 2021. So what it says is that there was a person who came on as a director, and his role is to have a say over business strategy and investment plans. Any merger or acquisition, profit allocation, so there's your share buyback situation, so you got to be careful of that, and a vote on the group's top 3 executives, as well as their remuneration packages, the company charter shows. So effectively, he had the ability to make a decision on all that. So, alarm bells are ringing a little bit right here, especially with respect to the profit allocation and remuneration packages for executives. Because, if you start messing around with the pay packages for executives, you may not necessarily be able to keep the best talent. But I think largely what that director was focused on was the power to control the content at ByteDance's media platforms in China. And so, the other comment that I made about potentially impacting the remuneration packages of executives, you're going to run into another problem with the CCP, because they're trying to attract people to come and work in China. So if you're making it less lucrative for executives to exist in China, then why would other people from outside of China, the best talent in the world, want to come into China and work there? Look, at the end of the day, when it comes to technology, there's just such a unsatiating hunger for talent. And, on this channel, I cover often about all the layoffs that are happening in the tech business, the unemployment rate is still less than half of the normal unemployment rate of the population. I think it's probably even 25%, so just 1%. And that's just your basic regular unemployment, as people are just sort of shifting jobs, or they get laid off and they take some 2 months to find another job. Essentially, all of these people are so highly coveted. Why would you want anybody who's exceptional, give them a reason to leave China or want to leave China and work elsewhere? Now, there's a lot of people who are already doing that, and so the Chinese government is already dealing with that. Look, you have a lot of problems to solve. The last thing you want to do is give another incentive to your best and brightest to leave. Canada has that issue and has had that issue for a long time. It's not a culture shock for Canadians to go into the US. And so we have a huge brain drain that we've been dealing with since the 90s, because you get a higher income environment and a lower tax environment if you just go 3 hours across the border. And so, a lot of Canadians do that. You have more Canadian professionals going south than you do professionals from the US going north. And so, we see that happening here, and Canada's a pretty reasonable place to live. So, if in China now you're having the CCP block remuneration packages, even just for like the top management levels as well. They start having decisions on compensation right down the firm, and the Sharma, or the idea of common prosperity, or just keeping pay packages down and making these companies pay out more. You're going to run into this domino effect. And I say all of this stuff, and it essentially makes sense, but we have just come across 2 years of the CCP doing stuff that didn't make sense, right? They held on to that zero COVID policy until the population just erupted. So I'm speaking from a place of logic and reason, but that doesn't necessarily mean that the decisions that are going to be made as a result of these golden shares will follow logic and reason. So for that reason, I always tell you guys, focus on diversification, make sure your whole nut isn't in China. And so this brings me to the moral of this video and what you guys are really looking for. And really what I'm saying is, investing in China takes an understanding of how the dragon operates. And so what you guys, once again, I have to ask you to do, or encourage you to do, is make sure you know exactly what you're investing in. And that's not just in China. If you invest in India, if you invest in any other jurisdiction other than the US, even if you're an American who invests in Canada, you got to understand the rules here. We don't even follow the same accounting rules as you do. We essentially report under IFRS. You guys report under US GAAP. And so you sort of have to understand these differences of investing in these different countries. And China is very specific. You know that the government is involved. And I just wanted to point out where I think the CCP is going to get more involved in with these golden shares. So, it really comes down to this whole watching video. So Tencent video, Weixin video accounts. Also, it's socializing. I also think that it will permeate its way into WeChat. Like, these things always just grow in what their mandates are, and so just what people are messaging each other about, etc. I mean, that already happens. Let's not make a mistake. And so when people were messaging me and upset about or wanting me to talk about this because they're really concerned about it, I go back to saying, what did you think investing in China was like? I just assumed that this was already happening through a back door, but the fact that they're formalizing it, it's like, whatever. It's a different day, but it's the same stuff happening, and it's just something you have to be aware of. And then same thing with the Alibaba ecosystem. You guys already know all of the money, all of the free cash flow comes right from here, retail commerce. But they have this digital media and entertainment segment. This segment doesn't make any money right now. And then I just highlighted where Youku is, because that's their sort of like YouTube type app. Now, the other thing that I would say is that the article didn't talk about it, but at least on the Taobao app and Tmall apps, I know, I don't have the apps, so it's hard for me to say, but, I know that they're now starting to use, online streams and such to sell products, but, you could very well use those streams to sell sort of give away information that the CCP might be suppressing on these other platforms. And so I think it permeates into this as well. You're just not hearing about it just yet, or it already has, but it just wasn't mentioned in this article. Guys in China who are watching this, or people who have lived in China, let me know what your experience has been with censorship on these two specific platforms. Now let's talk about the valuation quickly. So you guys know that this is the tracker that the Patreons get access to, and you can get access to this tracker at the lower tier of the Patreon. Now, you guys know that this thing is listed in order of share price as a percentage of intrinsic value. And of course, Alibaba has continued to run. The share price is now around $120 per share. When you compare that to the intrinsic value of around $230 per share, you can see that finally Alibaba is trading at greater than 50% of its intrinsic value, but I still think it's relatively inexpensive. And then when it comes to Tencent, you can see that the company's trading at approximately 83% of what I think its intrinsic value is. And so, overall, I still think Alibaba is the better buy, and it's the reason why I talk about Alibaba more than I talk about Tencent on this channel. But Tencent is an exceptional company. And so because I always talk about Alibaba, I'm not going to talk about their segmentation right now, but I am going to show you guys Tencent segmentation. So notice that in 2022, I'm expecting the games, social network segments to decline in revenue, but I do expect it to pick right back up in 2023. 7.5% is just 1.5% greater than what the overall GDP of the country is expected to grow at. This could absolutely grow at much higher than 7.5% because technology is just growing faster than the overall rate of the economy anyway. So if you forecast around 12.5%, closer to 15 even, I wouldn't fault you at that. I'm just being very pessimistic on this, or conservative, I would say. And then with online advertising, I think it's a bellwether. It probably goes down 2.5%. It might actually be 0 in 2023 and then grow out in 2024 and thereafter, but I'm just giving them that 7.5% here. Fintech, probably the largest technology, the fastest growing technology segment in the country as a whole. Alibaba's seeing this with Ant Group as well. I think 15% for the next 5 years and then down to 10%. And then the other segments, it's not a big part of the business, not worth talking about. And so overall, I expect revenues to grow at around 10% for the next 10 years. So, 10% here goes a little bit lower than 10%. But overall, I'm not expecting a superhuman amount of growth to support the valuation for Tencent. And despite that, the company is still trading at under what I believe its intrinsic value is. Now, I want to know what you guys think about this whole golden share situation. Let me know in the comments below. Also, if you've missed that video on Tencent where I did a full breakout, it was a very widely loved video. A lot of people even messaged me privately telling me how much they learned from it. You can get access to that video right here.